And joining us now, Chief Economist with Farmers Business Network, Kevin McNew. Kevin, great to have you back on the show. How are you, sir?
I'm doing good. Thanks for having me back, Jesse.
Appreciate the time. Let's dive right in, head first into this market trade. We're nearing the end of the month of May. A lot of things going on throughout the grain and livestock markets and the broader economy. I think let's start with just this wheat market. You know, we hear a lot about some of the challenges we're seeing with the wheat crop in the southern plains, obviously planting delays in the northern plains, all that on top of all the global issues. We're hearing food riots in some of these you know countries in the world where they have food security problems. There's just a lot of things going on surrounding the wheat markets. Big run up early in the week this week, and then kind of pulling back. Wheat Quality Council tour wrapped up this week, showing a lower yield. I know you guys have done some research as well into what the yields are in the Southern Plains. So just talk to me about the wheat market first and what you are seeing here and just what's all surrounding it.
Yeah, I mean, Jesse, let's start with just the short run action of the last week. It's just been phenomenal. We've been on this, really meteoric rise since late February when war broke out in Eastern Europe. Again, we came back this week and shot sharply higher, and now we're down a lot. We talk a lot to our farmers about these markets and say, this is a lot of market gyration. There's ebb and flow in funds and trading, profit taking, all those things. But I think overall, what I want farmers around the country to know is that we're in a point where there is a huge crunch and a huge problem as it relates to underlying global commodity supplies. And you touched on it a little bit in your introduction around the issues of food famine and food security. The UN Secretary General Gutierrez warned this last few days ago about the looming humanitarian crisis around food security. We talked about that at FBN. We did a State of the Ag report just following the outbreak of war, and that was one of our central features. Is that when you talk about wheat and its central need, especially in these less developed countries like North Africa. And that really put wheat in the crosshairs and made wheat exceptionally expensive and hard to get. And so, I think there's the kind of the global, pressure around the wheat markets that we're seeing. Now, more locally, as we think about, what's going on now, obviously our farmers in the Southern Plains are trying to get closer to harvest. We'll get closer to harvest in the coming weeks. And so all eyes are really focused on kind of the breadbasket of U.S. winter wheat, which is that stretch from Texas up to Nebraska to eastern Colorado. About half of the winter wheat crop is in that 5-state region, and it's been a tough growing season. La Nina has been unrelenting over the last 9 months, and so the drought that was kind of a blip in last fall, and it was dry-ish in the Southwest Plains, is now just really kind of taken its toll. And we're seeing the implications of that. You mentioned the Wheat Quality Council tour. We had one of our FBN economists out on the road on that, giving us data, and we saw clearly, some of the implications. And we did our own text poll with our farmers in that 5-state region, and they also confirmed what we think is likely to be a smaller than what USDA had projection in May. So we think the onus is on, the wheat market to really keep prices high, because there's no end in sight of the problems we have in front of us right now.
Well, Kevin, we think about the wheat market and the problems there. We think about the corded soybean markets as well. A lot of planting delays have been seen, especially that northwestern third of the belt. And we've made good progress the last week or two in the central and eastern belt, but still a lot of delays there. Specifically, we think the northern plains. There's talk of losing maybe 1 million or so acres of corn in North Dakota and Minnesota. And we look at, kind of the same stories in quarter beans, a lot of upward momentum here recently. And it all plays in as well to some of the global food concerns and tight balance sheets.
Yeah, you're right. I mean, I'm up here in Montana, and I can tell you I've got 6 inches of fresh snow here on May 20th. So, that's a double-edged sword for us, because we need the moisture so bad after last year's massive drought that, really tanked our spring wheat crop. But you're right. The cold, wet season up in the northern plains has just been brutal. I agree. I think we're probably going to see a 1 million acre downgrade in corn, probably coming mostly from North Dakota and South Dakota, maybe a little bit in Minnesota. Spring wheat also, we know guys, pivoted out of spring wheat early in May, mid-May even, because of the late planting. So I think there's going to be some adjustments in the June 30th report from USDA. And again, there's hardly anything you can hang your hat on and say there's a bearish story that's going to really derail this, massive run up. So, that doesn't mean that producers should fall asleep and just, not be marketing their grain and making strategic sales. But we really think that this is not a market that's going to flinch easily and pull back easily because of all the headaches we have in front of us.
Well, and we have plenty of headaches as well in the macro markets. Inflation is a word that we have heard constantly now for months. We're watching, a lot of it almost feels like there's not a lot of confidence in Wall Street or Main Street right now when it comes to what's going on with the economy. Consumers are worried about gas prices, farmers are watching diesel prices skyrocket. Everything in the supply chain is really feeling this crunch of inflation, and it weighs on the ag commodities as well. What are you seeing just, this week? We've seen, big sell-offs in the stock market. I mean, what are you seeing when it comes to inflation and the overall broader picture right now, Kevin?
Yeah, I mean, let's start with interest rates and the Fed. I mean, I hate to be a negative naysayer here, but the Fed should have done its job a long time ago. They waited way too long. They slow rolled any sort of decisive action to try and curb inflation, and now we're caught in the crosshairs of them having to get aggressive. And so we saw the impacts of big price hike in the last Fed meeting, probably another big price or big interest rate hike coming again. That's unfortunate. They could have been more strategic, but that's behind us now. What I'd say is, farmer inflation is real. Energy prices are sky high. That's not backing down anytime soon. Natural gas is sky high, which is of course linking into fertilizer prices. I think some farmers we talked to and were able to lock in a lot of their fertilizer, at least some of their fertilizer in the fall ahead of last year's big run up. But as we get closer to next fall and think about fall applications, no one's going to be immune. Everyone's going to be facing super high fertilizer prices. I don't think that's backing down anytime soon. And so all the headaches and all the inflationary, signals we have today, I think are probably going to be persistent into the fall, and maybe even into the early part of 2023 calendar year. So it's not going away, is what I'm telling farmers. Look at your margins, look at where you can cut costs. Fertilizer, in particular, big line item on that enterprise budget. You just have to be really strategic about the value proposition that high-priced input brings in these times.
Well, and I know as well with Farmers Business Network, you work with farmers across the entire operation. And we think about this, and you alluded to it. I know a lot of worry in farm country as we get into 23 and beyond. And one has to wonder, how do we navigate all of this, especially with just a lot of unknown still ahead of us, Kevin?
Yeah, I mean, it's a tough one. I mean, I think everyone is looking, looking at their food bill and looking at their car bill and everything, and we're all trying to evaluate whether it's consumers or businesses or farmers. How do I make it through this tough time? And there's no easy answers other than what I tell farmers is make strategic investments that are really showing immediate returns. This is probably not the time to be investing in long-term assets to improve your operation. That may be, really big equipment purchases or really big land purchases, in a high inflation environment, in a high interest rate environment. These are the times to kind of scale back on longer term investments and look more at short term operating expenses that you can adjust in meaningful ways for your bottom line. So that's my advice is, really take a fresh set of eyes and look at, things like fertilizer. That is such a big deal. A lot of farmers we talk to are trying to look for poultry manure and livestock manure to try and fill that void. There's all kinds of new products out there that are trying to maximize fertilizer applications. So, I don't have the answer to that. I know FBN's doing a lot of plot trials around these new products. So start looking. This is the time to start looking for alternatives in these high-priced environments.
Well, and of course, it's not just our grain producers, it's our livestock producers as well. We see cattle and hogs. We've kind of been back and forth here, but still, looking at $100 hogs and $130 to $150 cattle, where you're talking fats or feeders. And you think about export demand has been fairly strong, but consumer demand, I go to the grocery store, we're getting into summer grilling season. Do I want to buy a $20 steak or a $8 pack or $12 pack of pork chops? It's something that inflation, of course, is also impacting the livestock sector and the meat sector, Kevin.
Yeah, absolutely. And I think in some sense, what's transpired as a result of COVID and we know the headaches that happened in the packing industry, that may have actually been a short run blessing, because what it meant was food inflation was already hitting the consumer, and they were mostly immune to it because there was such strong fiscal stimulus. The economy was so strong, everything was so good. So, even though, consumer prices, especially on the meat aisle, were going up during the times of COVID, consumers weren't really resistant to it. We didn't see a backlash. We didn't see a downgrade in demand. And that kind of, worked its way through in terms of like margins for feedlots and things like that weren't terribly challenged. And so, as a result, even with corn prices going up, livestock operations were able to kind of, especially the cattle on feed guys, were able to kind of make it work. I don't know how long that lasts. Certainly I think there's a tipping point where you get the consumer, like you said, really doing comparison shopping, really starting to look at their budget and make some hard choices. So I don't want to say it's going to last forever and that we're not going to see some sort of demand response at the retail level that'll back up to the meat sector at the farm. But just again, if you're a meat guy, you're a livestock guy, you got to be in touch with every aspect of your business to make sure you're not caught getting squeezed when the market does correct.
Well, Kevin, fantastic stuff again. And before we run out of time, any final thoughts you have for us today?
I'm so optimistic about U.S. agriculture. I mean, this is like our battle cry right now. The world is screaming for more food. I mean, not just in a price sense, but in a food humanitarian sense. I mean, this is the rally cry that our farmers want to hear, which is, go out and be efficient and plant as much as you can, grow as much as you can. This is the market signal. And so I'm super optimistic about the next few years for agriculture. And I know there's challenges with high costs, but man, there's so much opportunity here. So I'm excited about the future here.
Well, we appreciate the time and the thoughts here once again, Kevin. And I know folks can learn more about all the research and everything that Farmers Business Network does, social media, and of course, online, FBN.com. With that, Chief Economist for Farmers Business Network, Kevin McNew, we appreciate the time. Thank you, sir.
Always a pleasure, Jesse.